S&P 100 index, that's what we're going to start with. That's this one right here. That's the large cap index, really. And the thing about it is that we had made these great rallies here, and we did. The thing that I would totally like to point out to MMTs is that this is where the year contagion came in. And they're debating now as we speak. And there's supposed to be this great cure financially and whatnot. So what led this rally higher from these lows that we were involved in is we got to the top. Then the headlines came out in that reversal bar, and then they marked it down the second day in a row. The thing about that reversal is on a daily level, MMTs, is that the price weighted action, the downside, the high was 577.22 and the low was 563 during this reversal there. And this one was even greater because the high was 563.37 down to 546.79 on the S&P 100. The upside movements, I'm clearly above the 10-day simple moving average, and I'm clearly above the 20-day rising above the 100. That's bullish for this. However, the key resistance levels are going to remain right here and until we close above it. And do fund managers want to buy the end of the year with all of the big things that have happened in Europe that caused it? The problem is that you would like to see the upside days be as equivalent or as equal to the downside days. You know, like this upside bar when everyone was wanting to get in up here. And they were buying the dips and whatnot because all was well in Europe. But it's not. That's the headline there. That's the upside move. And let's take a look at the S&P 500 on the other hand. The S&P 500 has a simple 200-day moving average in green. The price on that here for the S&P 500 is 1273.34. The 10-day simple moving average that we cleared today just so happens to be at 1250.38. And that would be the lower support level. The rising 20-day simple moving average is also bullish if you get a crossover as far as standard technical analysis. The problem is, once again, that the down days on the S&P from 1284.96 on the date of 10/31, Halloween Day, you went down to 1253. That was one big haircut. That was a markdown based on the European news. The second markdown high was 1251 down to 1215.42, and that was the low end of that bar, and that was that second day down. The problem is, once again, that the upsides, the math on the upside here, if you take a look at the low, which was 1219.62, you went to 1242.48 on that first upside. That low here today was 1234.81, and that high was 1263.21. So that the counter trend in volatility, this is all headline stuff, because this is what made the rally go higher, and then that contagion is in the market. You have the heavy duty unemployment report tomorrow. I'm going to conclude that the S&P 500 has resistance to consolidate above the 200-day simple moving average. Until then, it will act as severe resistance levels and or a consolidation above to break it back above the high and continue that November rally that started 2 days ago from that headline selling. Now, when we look at our NASDAQ comp today, okay, we clearly have a very bullish tone here at the 200-day simple moving average at 2689.78, and it got right up here to it. Now, the NASDAQ composite is a very strong index, and it led it right into resistance level. It's going to have to consolidate above here and in order to take out these all-time highs. Remember, it was the European news that took it from here to there, and that's where that low was, and they gapped it down on that markdown day on the second day of this week. They really gapped that down. This is how the gap down started. Then they marked it down right across here. This was a major support level that came into play of the actual bull run rally that started from here, that this trend line, that what happened over here would be new support as we had faded back, got back above it, tested it, and then made those highs. We came right back in. But let me tell you something, the broader index composite needed a bigger day as far as I'm concerned. But it's bullish, rising 10-day and simple day moving averages. The 10-day moving average 2673, once again, 0.10. Let's move on over to the Dow Jones for the after hour. You can see clearly the nice thing about the Dow today. What did it do? Once again, same rules apply. Unemployment numbers out tomorrow. You got a G20 meeting going on. You have a big move down here on the Dow. Yeah, you did. And it all started on that markdown high of 1229.29. And the low that day was 1195.41. Then they mark it down the second day. Here you go. They mark it down from the high of 11,951, clear down to 11,630, which was a major, major bottom that was put in. And the bottom attempt right here, it came from that low of 11,658 on up to the high of 11,876 yesterday, then came right back at that low today, by the way, of 11,835.43, and went right up to a high today of that magical 12,065.93. And that the 10-day and the 20-day, I'm going to read the 20-day moving average, 11,974.19. MMT, that 10-day moving average, which would act at current support, depending on the European contagion, that's at 11,923.12. That's going to be that lower end of that support level. Let us not forget, at 11,692.285, that's where that rising 20-day red line is. That's a 20-day simple moving average. That's what it is. That's this column. And you can see the math. At 11, you can see that we were going higher in that strength. Resistance remains here on the Dow. Dow has to close above this upper trend line, has to consolidate to take out those last highs. And you have to consolidate and keep a closing level above the 200-day simple moving average on a daily Dow. That will conclude today of 11/3 of 2011. It will conclude the contagion selling and then the buyers coming right back in. Once again, we find it that every time they mark these things down on the headlines with Europe, that it's always a great buying opportunity in stocks such as Google and Apple and Priceline and all of the ones that make great moves. So when they mark markets down, we enjoy buying them. And I'm just going to show that the Google chart was a good trade today in Google. G-O-O-G. There's the symbol, okay? And that the low was 583.72 and we closed at 597. That is part of that NASDAQ. Once again, we conclude all of the history today on all of the indices. And once again, here they are. 208 points here, 49 on the NASDAQ 100, 57 on the comp, 23 on the S&P 500, and that big, big S&P 100 index up 10 handles on the day.